Yahoo Finance, 1st of March 2024, global manufacturers struggled to expand while China's demand is still low. Due to its massive population crisis, declining real estate prices, and inability to live up to public expectations, China is stuck in a middle-income trap. Global manufacturers found it difficult to rebound from February's decline. European superpower Germany was particularly hard hit by a sharper decline in demand, and an uneven recovery in China obscured modest signals of progress in Asia. As the first quarter ended, several business surveys, which were made public on Friday, revealed a spotty performance in Europe and Asia. Despite businesses' optimism for the upcoming year, manufacturing output in the Eurozone shrank last month due to poor demand. S&P Global's Hub final Eurozone manufacturing PMI for February dropped from 46.6 in January to 46.5 in February, topping the preliminary estimate of 46.1 but falling short of the 50-point threshold that divides activity expansion from contraction for the 20th month. The PMI survey indicated that although official statistics showed prices grew somewhat more than predicted in February, the cost of raw materials decreased at a softer pace in the region, primarily due to the price of commodities rather than interruption in the Red Sea. The European Central Bank's policymakers are anticipated to continue their fight to bring inflation back to a target of 2% by holding off on reducing interest rates until June. Germany, Europe's biggest economy, saw its industrial slump worsen in February as output and new orders fell more quickly. The Italian economy shrank for the 11th consecutive month, albeit with some encouraging indicators, and the French recession abated. Spain did better than expected, with factory activity rising for the first time in nearly a year as domestic demand increased. Britain, which is not a member of the EU, had a year of declining output even though its PMI increased. According to McKinsey & Company consultant Boudewijn Driedaunx, the manufacturing sector's recovery is progressing slowly, as evidenced by the UK PMI and Eurozone statistics released today. There is a growing gap in manufacturing activity across the Eurozone. This is a significant divergence from the previous year when global developments followed a more uniform path. Bag mixed. China sent mixed signals. The official PMI released by the government indicated that industrial output is still declining, while the Caixin PMI, which measures activity in the private sector, showed a tiny increase. Unsettlingly, new data indicates that Japan's weakness from the second half of last year may have persisted, making the Bank of Japan's effort to end its ultra-easy monetary policy more difficult. According to Yuzuma Body of S&P Global Market Intelligence, the February PMI data showed that the operational conditions in the Japanese manufacturing sector continued to deteriorate. However, weak demand in both domestic and foreign markets negatively impacted the sector's performance, as production and new orders declined at the fastest rate in a year. As consumer and business spending declined, Japan unexpectedly entered a recession in the fourth quarter and lost its ranking as the third-largest economy in the world to Germany. This week's official Japanese statistics, which showed manufacturing output declining at its highest rate since May 2020, was followed by its PMI. Amidst indications that the world's second-largest economy is gradually regaining its footing following a severe downturn triggered by a crisis in the real estate industry, China has been performing patchily. Investors anticipate that China's parliament will convene annually next week and that more significant pressure will be placed on leaders to take action to restart the country's economy. However, there were indications that things were improving in other Asian countries. According to the PMI, February's export growth from South Korea surpassed estimates, and the manufacturing sector in India grew at its quickest rate in 5 months. This came as figures released on Thursday indicated that the last 3 months of 2023 saw India's economy expand at its quickest rate in 1.5 years. The major manufacturing economies of Southeast Asia experienced growth in other areas, with PMIs in the Philippines, Vietnam, and Indonesia indicating increased activity. In contrast, PMIs in Malaysia and Thailand indicated ongoing activity reductions.